Hello, hello. Let's see if this is live. Cool. All right, so today, let's get everything on. We're going to be tape reading, and what we start with is looking at the new week opening gaps and new day opening gaps. So this is a layout specific to that. That's literally all we use this layout for. We just look at it and see where price is in relation to old new day opening gaps and new week opening gaps. So we have 3 new week opening gaps above us right now. This is August 19th, September 1st this week, and then August 26th. And then below we have 1 new day opening gap, 2 new day opening gaps, and I guess there would probably be another new day opening gap between September 2nd and September 3rd, and that would be between 1 p.m. and 6 p.m. because it was a holiday. Let's see if there was actually any. So this is where we closed and this is where we opened. So it was the same price, so I guess there's no gap. So just going from the fact that we are likely to have price draw in the direction where we have a multitude of new week opening gaps. Here we have a cluster of 2 of them, and plus we have another one up here, and we also have very nice relative equal highs here in general. We just ran these relative equal lows. In fact, this should be on another. Let's go to another layout. Like that. Okay. So it's 8:56. Let's check if we have any news today. Tuesday, we have news at 10 a.m. Cool. This high impact news. So we'll expect a lot of volatility, and we would expect some type of movement. We have price dipping into this volume imbalance, and as Michael said, we should use the daily chart, whichever has more of a pronounced or existing imbalance. And we can see if we use the non-settlement type, we don't really see any imbalances here. But if we use a settlement of a different time, then we have this very nicely visible volume imbalance on the daily. I'm going to mark that out. So then, drop into it. We've already ran these relative equal lows. However, we still have these, well, we have these lows right here. It could be looking like a false bear flag, actually, because usually what you would anticipate is price continuing lower, just as it was dropping, and it has this flag, and then continuing lower. One potential outcome could be that price instead goes up and starts looking for premium. Otherwise, we can see this swing low also be attacked, as it's relatively equal to this one. Right now it's not one-sided, so I don't really have a strong opinion about any specific direction. I want to open it in this tab and maybe put out this one in global, so then here I could see it too. That's how I like to do it now. Oh yeah, and of course what we have also new day opening gap. Oh no, I was right. So there's not really a new day opening gap because of this. Because of Monday was a holiday. The trading stopped at 12:45. Well, 12:45, 15-minute candle closes at 12:59. We stopped there. We opened at 6 p.m. The difference in price was 0, so there wasn't really a gap. And then we traded lower. I'm going to mark this level out just in case, because it is something that is possible. So what we have here now, 7 a.m. We have these relative equal lows, then this low close to it. So we could see this drop. And in fact, this would create the idea that it would be a bearish flag, except it will only just sweep the sell side liquidity, and then we would have these highs all be potential targets, because once the price goes lower, let's say price goes lower, then all of this area becomes prime suspect for people to move their stops from here all to there, and then we can have price, once it does a liquidity sweep, come back up and go attack these highs, and then potentially consolidate and then go higher into the new week opening gap. That's what my idea is. But again, this is just my assumption, and we would need to see certain signatures in price in order to confirm those. So right now, what we're just going to be doing is just reading price. We have the volume imbalance here on the daily. So ideally, price shouldn't reach below the bottom of this imbalance. and we would probably keep our eyes on the consequent encroachment of this imbalance. Plus, we have another volume imbalance from a day before, well, from between Wednesday, August 28th and 29th, we have this imbalance too, which is also the daily volume imbalance. Let's do that one. Inside. And here we go. This is 1. This is 2. Now, let's go back to 5 minutes. What we had here is all these lows. We have 830 opening price. This is 830 opening price. So technically, based on the model 2022, if we anticipate a bullish morning session, which we have a nice draw of liquidity for, we have the ultimate terminus here, and we have these swing highs. This move lower, initial, below the 8:30 a.m. open, that is our manipulation leg. And us running out this liquidity right here and going back into this inefficiency could signal a nice reaction. So let's watch this. Look at the candles bodies so far. We have the sell side swept here. Sell side liquidity, and then buy side liquidity swept. Well, really, I guess above here. So now that defines our range. And our range is between this and this. We are currently in discount. So for it's 489 to this area generally be our discount. So this is where smart money would be buying, ideally. And let me make it a little less intrusive. Yeah, you can still see that. So now, question is, what is going to go on with price here? Look at that, we've traded above this short-term high. This body closed here. Now we have this imbalance right here. I like a blue one. Now, what I want to see is before price starts moving up and working through this area, I want to see a little drop down into here. And yeah, that would be something very nice. So, in general, actually, let me pull up my Notion so I can start taking notes. So today's what, Tuesday? Drop into Tuesday. Perfect. I want to see this line of a consequent encroachment remain, and ideally, price not trading and closing this. If it does, this should be the area where it stops, because this is a volume imbalance. Like that, and I want to see immediate reaction, immediate responsiveness on behalf of price. So let's go back to 1-day chart. We have this here. Okay, everything is self-explanatory here. This nice buy side. So what I usually do is daily chart, chuck that in there. Let's quickly look at the hourly. I guess I can do that on the hourly chart. Here's our gap from Sunday. Should actually done like this. Cool. Perfect. I'm thinking, actually, what I'm thinking is this long wick, which is technically part of this swing low, this short-term low, the 3-candle pattern. Look how long that wick is. And that wick coincides with the top of this volume imbalance quite close, so by just 1/4 of a point. And I'm gonna mark that out. 16 sharp. And we'll mark that consequent encroachment of this hourly discount wick. Yep. I like that. Then we have this here. Then we can still not exclude the possibility that the price could technically draw down into the sell side liquidity and therefore create that little fake, well, it would be initially looking like a perfect bull, like bearish flag, because we see this, then we see this consolidation, and then usually what we have is continuation. So my question is, will we see that drop into the sell side liquidity at 9:30 in 15 minutes? And then will we come back up looking for the buy side liquidity that would be resting here after the drop down, because a lot of people would be likely to basically move their stops lower if they were short, because at this point in time, from London session, we have seen majority of lucrative positions were aimed short, and now we would anticipate the price to turn on a dime, well, kind of the algo to turn and engage those shorts, because there would be the active liquidity target. Because right now, technically, what we have is consolidation in this area. And consolidations are, as per the first element, like the first lecture on 2016 mentorship, they're made to generate liquidity on both sides. And what the market will do usually is it will first engage the side of the market which has less liquidity, because that would be the initial fake rally, like fake move, to then set up the real actual move towards the larger pool of liquidity. So in my mind, the larger pool of liquidity is above us, the smaller pool of liquidity is below us. The question is whether we're going to see well, price move lower anymore, or whether whatever it has done right now is enough. That's the big question right now, to me at least. Because I think with this range already in place, this is enough. What do you call it? And evidently, what we have here is buy side imbalance, sell side inefficiency. We have these candles create efficiency in this, well, these couple candles, they deliver sell side, therefore they make this sell side inefficiency efficient, right? Oh, and of course, this would be something I'd be looking at for targeting, because it is sitting at let's just keep writing this because I really like that. Sell side inefficiency, buy side imbalance. Sorry, sell side imbalance, buy side inefficiency. The red. Cool, perfect. delete that. Oh yeah, and of course what I said earlier, we have the Chicago Mercantile Exchange open, 8:30 a.m. open. Watch how price navigated itself here. Although we didn't just stop on the dime, it did drop lower and drop below the volume imbalance, and only then we started running. So at this point, I would like to see price. Oh, I see. So what it could do is I don't think it needs to come back below the swing low that it has created already. Because this is all I don't want to sound wrong, because also I haven't been practicing this, but wouldn't this be a balanced price range? Because we have a downside delivery and then we have a, well, sell side delivery, and now we have buy side delivery. So although there's a SIBI, we now have completely repriced this SIBI previously, and now we'll see if there's an imbalance that paints here. If it paints, because we have 4 minutes before close of that candle, and it seems like it's unlikely. But what we do have is this displacement leg, and we have a few fair value gaps in this area. I want to see how these gaps interact with price, how price interacts with these gaps more certainly. We dipped into it in the first one. The body closes just slightly into it. We are 3 minutes away. I think this is where the narrative of the bear flag is going to be kicking in. The question is whether we're going to drop below these two lows. Even if we do, it doesn't cancel out the possibility of price going back up. It's just that what I said earlier, we could see price in fact drop below here and only then turn around the hourly with consequent encroachment and the other higher time frame PD arrays. Because what we have here now is okay. Like that. Let's watch price. It does look very inviting for me right now to anticipate price likely drawing higher. But do remember, we have news at 10. So I'm going to mark that out actually. We have news at 10, and that potentially could be the beginning of, well, we have some time before a real move will start unfolding, because this is, as usual, as Michael says, this is our TV guide. This is when the best shows are on. So during all of this section of time, the 30 minutes, the opening range, I could be behind the idea that, yeah, we could be just working the downside of this area, going into the sell side liquidity, maybe even the hourly wick consequent encroachment. Because as we can see, these gaps are quite not supported. In fact, make this a little more orange. In fact, we could see price, well, yeah, here's the opening range. Price just dipped back into this inversion for value gap, and now it's dropping, and now it can be dropping here. Let's see if it does. Just as a reminder, this is the sell side liquidity from a while before, from here. Yep, another drop in here. So now ask yourself a question. What is happening? Well, we have price dropping lower. This is the creation of a bear flag. So now people that see price drop below this, they're likely to short into it. So if they're shorting into it, their stops will be above here. Additionally, people who have shorted since London, they would move their stops to lower, to just above here. So now this is where our setup either pays out, and, well, our anticipated idea, trade idea, pays off or not. This is where we would be looking for a smart money reversal. I really like that we had created this huge wick. We've swept the sell side liquidity, and we've entered into, well, a good portion of this daily volume imbalance, the new one. Let's see if this wick supports price and it creates a short-term low, or whether it's just going to continue going until the hourly volume discount wick, which it seems like it will do. Okay, the consequent encroachment of the first daily volume imbalance. Does it show sensitivity? Does it wick and just immediately reject? Well, what do we see here? It wicks it and then starts running. Now, if it was to continue lower, this SIBI would reject price, so the institutional order flow would be bearish. Let me just do it a little different, maybe bearish. No, not version for value gap, just that. Now it's wicking it, and it's hanging around in that area. So I think if it is hanging around, it's probably going to go lower. Okay. Has gone lower into the hourly discount wick. Now, does it show sensitivity there? Oh, actually, let's also see where our opening range gap is, and what we see is magnificent. We see the open and the close. This is our opening range gap. I don't think I have one actually. Oh, I think I did it with a fib. I guess I didn't. Well, right. We drop even lower. Well, to answer the questions that I had just earlier, price dropped lower and created a stop hunt. So this looks now like a bearish flag, yes. Has it swept this? Swing low. Has not yet swept this swing low. You have a new day opening gap right here. Let's watch it here. You have a new day opening gap right there. Yep, that's correct. It could completely fall out of bed and just go lower. And if it does fall out of bed and go lower, then I would see it go here. So far, we're staying inside of, I don't like how this is lines. It's a little too much. Yeah, let's do that. So far, we're inside the daily volume imbalance. Give me a second. All right, I'm back. Well, in this scenario, I think we could see price trade into the new day opening gap of August 29th. All like could be the outcome. Let's see, do I have any missing new day opening gaps? Oh yeah, let's do this one too. Right, so where's that one? Mm-hmm. Remove this wick. So pay attention how we swept this sell side liquidity right there. We swept this sell side liquidity. So these were the relative equal lows. Now, do we just keep going? Keep going lower or not? It's interesting because with settlement on, we get the new day opening, sorry, we get the volume imbalances, but with settlement off, the closing price and the opening price, they are the ones that show, they're the ones that show the new day opening gaps, new week opening gaps. Very interesting. Now, question is, where can we anticipate the price to stop going lower? Well, I truly wouldn't want to see price trade in a new day opening gap of August 29th, because then the long-term bullish outlook on the weekly would be less likely. But we can see here we have reached the midpoint of this wick on the weekly. Are we seeing sensitivity? Is it time for a smart money reversal? Well, it looks like this down close candle right here, I want to see it maintain price. We've come back into it, wicked it, and then now we're trading higher. Why does this candle specifically stand out to me? Well, it is part of the swing low. It has occurred as we went into the relative equal lows on the hourly. I'm going to actually say hourly. Perhaps it was 15 minutes, but let's just, let me see. Let me actually confirm. Yeah, it was 15 minutes. So, in other words, this candle is the change in the state of delivery. But that means I want to see that down close candle support price and start working up. Because we have all of this range created now with news coming out. And all of the liquidity that I said earlier, it will now be sitting above these highs. Where does the hourly candle close? I should have probably not deleted that hourly wick. Just out of interest to see where it falls in. We'll check it out once the hour closes. Let's go back to 1 minute chart. It was a very animated move on the downside. And my suspicion to why is because it's earlier into the week. So if the weekly bias is truly bullish, I mean, just based on how the time aspect of trading works, like a real move would unfold after a manipulation. And manipulation usually is the first portion of the week. And that's why maybe we saw such an animated move lower, like such a protraction. We're still not out of the woods because, well, we need to wait until the news release and see what we've got. Again, I want to see down close candles, support price, if we are in a bullish institutional order flow. And it's not likely. It is not likely. It's making another low. Well, as we can see, price got back into the consequent encroachment of the volume imbalance, and now it's dropping. Well, with that, I think price is then likely to go for the sell side liquidity right there. And we even have a nice imbalance here. Like that. Well, if this is indeed what price is likely to trade into, then with some reasonable possibility, we can anticipate price to draw higher and then drop into it. Now we have a sweep of buy side liquidity. We have news release in 5, 4, 3, 2, 1, and boom. And we have sell side liquidity below. Now, whether we form a fair value gap would be a nice question. So this is our short-term long. We have formed a fair value gap, thus price come back into it, and then continue lower for the sell side liquidity. It does. Well, the stop loss would be here. The target will be there, and then we'll just watch. What does it do? Does it leave a big portion of it open? Does it trade to the consequent encroachment, which we ideally wouldn't want to see trade to? And what it does, it overshoots this imbalance completely. We've only traveled to here. Now, this could be the beginning of smart money reversal. Actually, let me put some notes. Now, okay. We have all of this range that we've created since 9:30. We have now traded above the short-term high. Question is, are we going to start coming up? Oh yeah, and let's see how the hourly candle closed. The hourly candle closed way outside even, well, it stayed within the wick though. This is the wick that I'm talking about, and it stayed within it. However, it did dip way down into the new day opening gap from before. Now, how does the price navigate this? So I feel like this is similar to one of those days where price has just been going in one direction, and it's very difficult to say whether it will continue going in the same direction or whether it's going to reverse. You don't want to just be counter to the main order flow that we've seen so far, but also you don't want to just keep shorting into it. So I just say that it is not really, I'd say just wait. There's nothing to do. Nothing to do, nothing to be, nothing to beat. Also, this is an NFP week. NFP week meaning we have non-farm payroll news release on Friday at 8:30 a.m. And generally, the reason that Michael says you should be done your trading during the NFP week by Wednesday 11 a.m. so not entering after 11 a.m. New York time on Wednesday, is because this week is just higher likelihood that there will be manual intervention in the price action, meaning that the signatures that we usually aim for and look for they might not be as clean cut and as neat as we usually expect them to be, and it sometimes can be very unpredictable. And just the best way to deal with that is just completely stay out and just read price instead, and know these situations when it is unlikely for you to find any consistency or find any one-sidedness in the market, because right now I don't see one-sided. Like, it could just literally drop lower back into the, like, back to fill the BC completely, because we tapped it. This is the BC that I believe it was still unfilled, so we went below the swing low. Actually, we didn't even go below it, so that might be a telltale giveaway sign. This is relatively lows. So now that we've gotten back below this area, look how this CB right here is behaving. Let's see what happens now. Price still remains within the boundaries of acceptable of the CB. So my suspicion was that price wants to fill this BC. It is still possible because we see that we haven't traded up to the upside of that CB, but again, we're just reading price, not putting money on it. So far it's been a nice day, but I really didn't see anything besides what I saw earlier, but that didn't play out. There's still PM session, however, and PM session could show some light. But let's see. Oh, I like that. I like the fact that this body, on the daily chart, the body of this up close candle that makes the swing low, the midpoint of this body is the mean threshold. And we want to see if there's any reactivity from price touching this level. We want to see it kind of just immediately start trading away. Which was basically right here. This is the level I'm talking about. But it doesn't seem like price is trading away from it. It's just hanging around in the area. Give me a second. And yeah, it's just going back and forth, hanging around in this area, and now dropping in. Hmm. Just putting a quadrants, putting on quadrants on this new day opening gap to see how price is painting around them. And then we'll just do them in this manner. And do this, and then do that, and then like that, and then we move sync globally. And what we have here is that. Maybe do it a little thicker right there. Watch how price reaches back to it, but now it just doesn't. Actually, labels right middle. Does it touch the low? 19,296.25, 295.50. So we dug into the first quadrant of the new day opening gap of August 29th. Let's keep it like that. Now, I would find it unlikely for price to go for the sell side liquidity now, and potentially we might be seeing a reversal. Now, where would we see a reversal? Well, we have a range from here to there. I mean, where the target would be. And this first half, the lower half is discount and the upper half is premium. So if you're anticipating smart money to purchase and accumulate their longs, you would watch them unload it anywhere between this swing high and these relative equal highs, as well as these relative equal highs, and maybe even fill this gap. But also, what we have here is an old new day opening gap. Price has really taken a beating and came back into this new day opening gap. But watch how clean the bodies respect the BISI. So let's see. The low on this one is 293, and this one is the low on the BISI itself is 292.75. So it stayed inside of it. And then what about this? 292.75, 292.75, perfectly inside of it. Well, that could be indicative, but still, at this point, I'm not really interested in much, and perhaps we can see some sort of movement at 10:30, 30 minutes after the high impact news release. But I'm not too hopeful because we have already created a huge rally, a huge sell-off from 9:30 a.m. Well, really all the way from 8:45. We had this imbalance here, and then price wicked it and then kept going lower. Gonna watch price for another 30 minutes and then shut this off. I honestly think PM session is going to bring about something interesting because we still have a huge opening range gap. So basically where the difference is between the close, the close of previous day and the open at 9:30 of current day. So that difference in price, that is our opening range gap. You can see through the regular trading hours. and we still keep going lower. And we're probably gonna fill this whole thing. Sell side there is taken. We're encroaching on this imbalance. Yeah, I think I'm losing the plot and getting pretty tired. I don't see anything. I don't anticipate seeing anything. I will probably just look at PM session after the fact and journal that a little bit. Yep. And then I'll post it on the community page so we can look at it. But at this point, yeah, the new day opening gap probably going to be filled. And then really don't have any ideas as to where price is going to go. Yep. All right, well, on this, I'm going to close it. Thank you for sticking around, and I will talk to you the next time, which probably will be tomorrow. Yep, let's do it tomorrow. Meanwhile, I was gonna say I'm probably not gonna be posting any reflection videos per se because I think right now I would rather focus on journaling and just generally learning more because I'm not sure how I can structure the reflections yet. Um, yeah, I think that would be better because the quality would be better and also the content wouldn't be just kind of rushed because I would be doing it for myself and not just for the purpose of making content. That's how I find the reflections have been going so far. Yeah, with that, I think we're gonna stop it here. See you tomorrow.